Hey guys, anyone in here? Let me know if you're here in the chat. This is my first stream, so do you hear my voice? Is it proper? Let me know in the chat if you hear my voice. Welcome. Thank you for joining the stream. This is my first one. I'm a little bit excited. If you have any questions, you can ask them. I won't be distracted too much. And for the first couple of streams, I will not be taking any trades. I mean, I will not take any risk. I will take paper trades. But over time, I will start to trading live. Okay. So right now, it's more like me talking about the price and taking some paper trades and answering your questions if you have any. Okay. So first off, I started with drawing the weekly opens, weekly opening gaps. I draw them from the Friday close and to Sunday open, just like this. Let me hide the indicators and remove everything. This is the Friday closing price and this is the Sunday opening price. I make this weekly gaps purple. Like this. And I draw the last 4 weeks opening gap. I use this indicator. If you want, you can check this too. This one. True backtests. I believe last 4 weeks opening gaps are the most important ones. I draw these last 4 weeks gaps manually in case the indicator glitches or doesn't show them. Especially when price is range bound like this in the daily chart. As you can see, price constantly making mean reversions, taking out the low, going higher, then taking out the high, going back inside the range. It's pretty range bound. It is consolidating. So when it is like this, price bounces between these gaps. So I use them as higher time frame reference points, point of interest, PDRA, whatever you wanna call them. It's all the same. And this Green is the daily opening gap. I will try to apply the same logic and same routines every day. First of all, I draw these levels. This is the daily opening gap of Friday. This is our current weekly opening gap. This is last week and the week before and then the week before. Normally I use last 4 weeks only, but sometimes I get curious and I try to see with another indicator if there are any close to price and I try to see if price is respecting them. This gap is one of them. It is from the beginning of the January, and I was observing that price taking nice reactions from it. So I will leave this one on my chart too. I will also mark out the liquidity levels. In these recent days, price has been really range bound and it has been creating ranges inside the ranges. This is the biggest current range, and this is the another range inside of it, and another range. Price sweeping the highs, going back below, taking the low, going back above, taking out the highs, going below once again and taking another low. So currently higher time frame is range bound, and what I try to be careful about is not trying to not get caught to reversals. For example, when price takes out this high and starts to come back lower on Thursday, I stay cautious to not getting caught in longs during these expansion lower. And on the Mondays, let me close this indicator. Yeah, it's better like this. Okay, market opened. And price is inside the weekly opening gap. This weekly opening gap is an inefficiency, so price might treat it or use it as a resistance level. It might reverse from here, or price just chop inside of it, or price might reclaim it and use it as a support. So in these days, when price is right inside the gap, I try to avoid taking any trades. And I also I used to trade the market opens. I used to take trades during the high volatility movements like that. I was taking scalp trades in lower time frames. This kind of setups, sweeping the low and then going higher. But I no longer take these kind of setups because taking too many setups creates decision fatigue. and that decision fatigue might lead to things like over trading or over leveraging or jumping with FOMO. So I am approaching the less is more. I'm accepting the less is more approach. Okay, let me check the chat. If you have any questions or if you don't hear anything properly, you can let me know on the chat. I would gladly answer your questions. If everything is fine, I will just continue. Okay. Now these gaps may seem a little messed up, a little confusing. So let me close the indicator. Okay. When many gaps stuck like this, I mean, there's this gap and inside of it another gap, and now current week's gap. These gaps most of the time acts as a magnet. As you can see, it is as if pulling the price towards it, especially if the price is range bound, because when price is creating the open, high, low, and close, when it is creating the candlestick, it creates a candle wick, the candlestick wick. After creating the wick, it comes back to open most of the time, especially if price is not expanding. So in here, price opened this weekly candle right here, came back lower, and reversed after probably coming back to this wick. Then it went back higher, and where did it go? It came to the weekly open level and previous weekly close level. This one is previous weekly close, previous weekly open, and current weekly open. And we don't know yet where the current weekly close will occur. Daily and weekly candle is pretty much the same, obviously, because it is Monday. And it looks like it is taking a nice reaction from this previous day low. It is also a tap low on 4-hour chart, as you can see. This is a range. This is the range breakout. This is the tap of the range. Price sweeping immediately and going back higher. After it went back higher, this becomes the new tap low. Okay, this was the tap low. Price used this as to create an SPS. It went back higher. Now it came back to test this move origin and sweep this low. So today price looks a little bullish, but there is one problem with trading these kind of price actions. During 2024 and 2025, I mean, when the daily chart was bullish, it was a little bit easier to trade, because if you saw something like that and price was reversing higher, all of the bullish, almost all of the bullish SPS setups would give at least 2 to 3 hours. I mean, it was easier to trade when it was trending, but when the daily chart is consolidating, it gets a little bit more complex, because there's always a probability for price to reversing after a certain amount of expansion. Okay, I mean, when the daily chart is trending, it usually keeps expanding on the lower time frame. It does things like that, goes higher and higher, making SBS setups, given SBS setups, and keep expanding. But we see a lot of mean reversions during these days, so it's a little bit more difficult and it requires a little bit more caution. So this is normally a tap low, but I would rather see price creating another tap low and giving SBS around here instead of taking waiting this one because of these imbalances, right? I mean, if there wasn't too much imbalances, I would like to see that price coming back, sweeping this, giving double bottom and going back higher. But since there's this big white candles, these imbalances, I would rather see if the price going to be bullish, see it consolidating around here and buy the strength instead of buying this weakness. Okay, so another thing I like to observe is the first 5-minute range. I open the 5-minute candle, 5-minute chart, and then put a Fibonacci in here and just look at the deviations of it. Simple, right? This is the total range. This is one standard deviation of the range. Okay, and this is the standard deviation below the range. Because I have observing that price getting reactions from this level, sometimes reverses from these levels or sometimes just making retracements. So I will leave this on my chart. By the way, I used to take a lot of trades during the market open. I mean, I was taking many trades, many scalp trades throughout the day, and trading really volatile and one-sided prices like that, especially during the open, triggers some impulsivity in me. I mean, it's something personal. I'm not saying these are bad to trade or good to trade. I am just saying I prefer to wait and observe these most of the time. Because first of all, the first couple of minutes, especially the first 15 to 30 minutes of the market open gives a lot of information about the volume of the day. What I try to say is, let's say sometimes price goes like this, makes a retracement, makes the higher high, comes back to sweep the low, and then goes back higher, right? And sometimes it does the same thing, but it makes one more sweep, a double bottom, and then goes back higher. And sometimes it makes a triple bottom like this, or even more. So when I observe the price action of market open, I can anticipate which one is likely next. What do I mean by that? I mean, most of the times, if price is expanding with a strong momentum, it has got a tendency to do this. And if the first SPS setup, I mean first chance to get in, is like this, there is a higher probability to see the second one like this. If you see a slower price action during the market open, especially on the first 30 minutes, there's a high probability. It's like that law of motion in physics. Whatever price is doing, and we observe whatever price is doing, and we assume price might keep doing that. If price is chopping, we assume that price might keep chopping. If price is expanding, we assume that it might keep expanding. And if price is just making deep retracements like this, leaving wicks, etc., we assume that this might be the case for all of the day, okay, until its price proves otherwise. Okay, so this one looks solid. We may take a long setup after price sweeping this and showing strength, or we might just skip this one to understand what is the tendency of current day's price action and try to get the second one. Okay, now I will open the moving averages. Moving averages seems pretty solid and strong. By the way, I wanna mention this. I got my biggest losses when I am trying to short price actions like that. I mean, look at this visual. Look how the 20 simple moving average looks and how the 200 simple moving average looks, and look at these imbalances on 1 minute, and we will probably see imbalances on 5-minute and 15-minute charts either. So I would be very cautious to open any short setups. Let's say I have a bearish bias and I am looking for a short setup. Let's say I call this a bearish tap high on 15-minute chart, and price hit the 200 simple moving average on 15-minute chart, and price deviated above the weekly opening gap a little. And let's say I have a bearish bias. I still wouldn't take short right now. I would instead wait for price to reverse and then give me an SPS setup, give me a sweep setup over here on 1-minute chart, and then participate it. Try to get a setup like this if price do something like that, and then if price starts to come back lower on 1 minute and takes out the highs and reverses back lower, I might look for short setup. I mean, I never try to catch the exact tops or exact bottoms because it is the lowest probability and most dangerous thing. It might just keep sweeping highs, making new highs, and stopping me out several times. So I will currently just wait and try to see if I can get a bullish setup opportunity. Okay. Do you have any questions? Okay. We have a news release on 10 a.m. It is a red folder news, ISM manufacturing PMI. I don't like to be in setups right before the red folder news. So if price doesn't give me any opportunities before this 5 minutes before the news, I will just wait for the news and I will just observe what happens during these times of the day. I have been watching the Nasdaq chart for the last 2 years. I don't trade anything else and I don't even backtest other pairs. I don't look at them. I don't check them. I only look at Nasdaq, and my experiences are telling me that these times are the one of the greatest times to trade the AM session. I see many opportunities over here. So considering the fact that we have a news release on 10 a.m., I'll just keep waiting. And I am totally comfortable with watching the price expanding without me. I mean, I have to be comfortable because um, there was times I wasn't, and there was a lot of times I made money with FOMO. I mean, I would see candles like that and I would tell myself, well, it's going, let's buy. I would buy, I would get profits, nice profits, but in the long run, I believe it just doesn't worth it. I mean, in short term, yeah, I may get profits, I may pass accounts, I may get payouts, but if there is no discipline, all of them just vanish. The money comes and goes, the funded accounts comes and goes. So if there is not enough discipline, there is no meaning on making anything because, well, I eventually ended up with nothing by acting impulsive and acting like gambler. So I am trying to develop the skills about patience, about discipline, about doing what I told myself I was gonna do. So I'm not in hurry. I'm not in a rush. I'll just keep waiting. Sometimes it gets boring, I know that. But if I really want results of a professional, I have to act like a professional. So I just have to accept and embrace the boredom. And eventually I get used to it, and boredom somehow becomes more fun. It seems like price may not reverse back lower from here because there is a hierarchy between the time frames. You know, think of it like there is a force pushing price above, and there's some forces trying to push price below. And the force that pushes price above is this previous daily low and this 4-hour move origin, so a bigger time frame. Also, price is range bound, and price came to range highs, swept some of them, and then came back lower. Now price swept a range low and went back inside the range. So there is daily and 4-hour levels below, and price seems to get a nice reaction from it. And there's also 15-minute dynamic resistance level over here, and it's no big surprise. It wouldn't be a big surprise if price disrespect this level and keeps going higher. So I'll just wait and observe. But just because it looks bullish, I am not going to marry a bias, you know. Okay, it currently looks bullish, and I would take a long setup if I get a high probability opportunity. But just because it looks bullish right now, just because it took some reaction from the bullish levels, doesn't mean that it has to keep going higher. Okay, what I'm trying to say is, since the higher time frame is range bound or consolidating, we may see the reflection of it on lower time frames either. I mean, when the higher time frame is expanding, we may see one-sided price action more. We may see expansions with little or no retracements at all. But when it is range bound on higher time frame, we may see a little weird stuff like this over here. Price expands lower and price seems like it's just dropping that, and then after getting closer to lows of the some of the ranges, it then bounces a little and then comes back again and then bounces a little again. So even though this is bullish, it wouldn't be a big surprise to see that price is coming lower, testing the lowest levels. I'm making really deep retracement and then going higher. So I also don't want to get caught in a reversal. I mean, okay, I am not trying to catch the top, and I don't want to I don't want to try to catch a short setup right at the top of the ranges, but I also don't want to get caught to a reversal, okay? I mean, I don't want to take long setups like that if price if I see a probability price actions like that, okay? This would still be bullish, but I would end up losing. In fact, I made this mistake on last week's Monday, and that's one of the reasons I decided to go back and try on trading paper for a little while, because I want to develop the correct habits, you know. I mean, the profitable and automated habits are what I am trying to achieve. If I can create the correct neural pathways in my brain, then being a profitable trader is going to be a automated process for me. It will be like smoking a cigarette or playing a computer game, okay? When it gets automated, it looks easy and it gets easier. So the purpose is being able to trade properly, trade good without relying on willpower. And to do that, I have to be focusing on the process more than the individual trading days, individual outcomes. This is why I just keep waiting patiently. This is the news release room candlestick, and I'll just wait and see what it does, because I observed that price goes one-sided after a red folder news release. I saw huge candles going down, I saw huge candles going up, and I also saw price just chopping for a while after the news release. And this one is the particular one that destroys me the most. So I really don't like to trade these kind of price actions, and I just stay away and try to see what it does, try to understand. And most of the days, even though I have no idea what the price is doing or what it might do, if I wait enough, I just see one good setup. I can just tell myself, well, it's doing this, and those are the most high probability setup. setups. So let's check what price did today. Price swept the liquidities during the Asia session, and price kept going higher after the London Open. Our liquidity levels are not swept yet. Price expanded towards the new week opening gap, weekly opening gap. Let's check this on regular trade hours. Yeah, this is the current one. This is the opening gap, weekly opening gap, but on the regular trading hours chart. And most of the time price respects these levels too. Where is the midpoint of it? Just a second. This is the closing price of Friday, and this is the opening price of Monday. As you can see, price get a nice reaction from the midpoint. And then started expanding higher. Then price came to this deviation level. Remember this line, this we drew a Fibonacci on the first 5-minute candlestick, 9:30 and 9:35. It looks like this on 1-minute chart, 9:32, 9:34 actually, not 5, because this is the new candle. I mean, this is the start of the new 5-minute candle. We drew this. Price came to one standard deviation, hit the level and get some reaction off of it. And this is why I like this. I like to see these levels on my chart. Okay. Now I will make it a little bit thin again. I'm just trying to get a feeling what is price doing, and does it have a high strong momentum? Does it leaving gaps unfilled or fulfilled? How is it reacting to certain levels? For example, does it getting bounced from black candles, and does it leaving too much wicks? Things like that. This gives me clues about the momentum of today, momentum and volume. As you can see, I don't even look at the order flow or volume data or anything like that. I just look at the candlesticks and I can get a feeling about the volume and momentum based on the shape of the candlesticks and the way they form in live price action. I'm not looking for taking too many trades. I'm not even looking for taking a trade. I'm just trying to enhance, trying to improve a habit. Think of it like that. If you are not addicted to smoking, for example, how would you get addicted to it? By smoking cigarettes. And if you keep smoking more and more, you would get more and more addicted. This is all about the way human brain works. Human brain consumes too much energy, so it has been evolved to preserve energy. In order to preserve energy, our brains creates automated behaviors, the neural pathways for automated behaviors. And with that automated behaviors, brain just gives signals to the body to do certain actions without even thinking about them and without consuming too much energy for them. The good thing is when a behavior gets automated, it gets really easy to do that certain particular behavior. The bad thing is if that behavior is counterproductive for us, like smoking cigarettes or scrolling on social media, etc., then the bad things happen. The things we don't want happens. I mean, uh, neuroplasticity has both ways, works both ways. It might get things might get better by repeating them, and also things might get worse by repeating them constantly. So I'm now I'm now looking at this law. It looks nice because we have a solid range below it. I mean, this range might work as a support level. We also have got multiple imbalances below it. Now price swept it. I normally don't go below the 1 minute chart, but if I see a nice momentum, I look at the 30-second chart and then I might consider taking a setup on 30-second. Yeah, this looks like a solid SPS setup. I will place a buy stop order above it. Okay, price took the order. I will place my stop loss below this low. Since I am entering after the price expanded a little, I will be taking profits a little bit earlier. I mean, if price gave me a long setup over here or lower, I would carry it more. I would take my first partial on 2 hours at minimum. But since the price has been expanded a little, I might take my first partials a little bit earlier than that, okay? So I'm checking the hourly chart to see. I kind of feel like the eventual targets are here for today, but price already expanded quite a bit for today, and we saw a lot of back and forth price action in the past. Today is Monday and also the first day of the monthly candle. So I will take a partial on 1 hour around here, and another one above this candlestick. So half of the position is closed at 1 hour. Let me check the balance. We took about $100 profits, and our current risk is less than $100. So this setup basically became a risk-free setup. We can carry it just like that. We can trail stop loss to break even, and if it takes our break even, we would end the day on profits. This all depends on the system that we prefer. Okay. Now let me check how much risk we took point wise. 18 point risk, and price almost hit the 2 hour. So I want to take another partial in 3 hour, which is about 54 points, I guess. Yes. And I don't even focus the amount of money, I just focus on proper execution. And I know that if I can keep trading just like this consistently, I can scale this all the way up. And as long as I keep scaling, the amount will be multiplying. So I'm only focused on the process and long term, because I made money on the short term. I made $100,000 in 1 year, and I started uh, about $600. So I made pretty decent money, but that money was gone away eventually because I couldn't keep the discipline. I couldn't keep the consistency, and I was too focused on the money I made, and I was just trying to make more money instead of refining my process, instead of uh, growing, instead of improving myself as a person, improving my trading performance, and just improving myself in any other aspects of life. Okay. So I currently don't really care about how much money I make today, because I trust that if I keep working on the process, if I keep staying disciplined and consistent, the amount I make today will be a joke for my future self, no matter how much money I do today. If I do $100 today, it will be little for my future self, because my future self will be making thousands. And if I make 1,000 today, it will still too little for my future self, as long as I keep focused on the process instead of the small outcomes. Okay. Do you guys have any questions? You guys hear my voice, right? Come on, guys, come to chat. Don't be shy. I'm really here to socialize with like-minded people, with the people like you, with the fellow traders. And I really respect all of you just for trying, because this shit is really difficult, and it sometimes gets really lonely with the charts, just looking at the price, looking at the wins, losses. So this is the main reason why I decided to go live and talk to nice people like you. Um, I guess I needed to externalize my thoughts and my ideas to make them more concrete. So I believe I have quite a bit experience, especially with Nasdaq. And let me put this into break even. I believe I do have the experience, I have the knowledge, but inside of my head was too chaotic. Uh, it was probably mainly because of my lifestyle. I smoked too much weed, I drank too much alcohol, I scrolled on social media. Things like that creates brain fog. Look at that price. I'm really surprised to see this. It keeps expanding like that. So inside of my brain became really chaotic, right? So I had to quit all of those substances, and I did quit. I have been sober for about the last 4 months, and I'm quite confident that I won't go back to that lifestyle, because I really want to succeed in trading so bad. So trading actually saved me from those substances. And I don't really want anything in my life that might interfere with my trading performance. If something may have any negative effects on my trading journey, I would delete it, immediately delete it from my life without hesitation. So I see a momentum here, and I see some lows over here. This is the 30-second type low, and this is another low. And I don't want to stay inside of a big, big, deep retracement, okay? So if price is going to take out this and then go back higher, I just simply don't want to be inside of this move. So I will move my stop loss to here, because I see that there is already a tap low here, and I would like to see this zone holding the price. Okay, if price, and it's not that just that zone. There is actually more support levels in the lower time frames. If the momentum is really strong, and if price wants to really keep it going with high momentum and strength, then this is our support level. We don't want to see price going below this too much. And if price decides to make a little bit of retracement, then this gap and this little block is another support level. Because if you go even lower time frames, don't check too much lower time frames. I don't recommend it. You may do whatever you want to do, but looking at too much lower time frames like 5 seconds might create some confusion, because the more you go deeper into the rabbit hole, the more stuff you start to see, and you feel like, wow, this stuff works really clean. If I can't find a setup, I can just switch to 5 second and I can see many SPS opportunities along the way, right? It looks like that. Plenty of setups, but the lower time frames work properly only when momentum is really high and strong. And the momentum is high and strong. When the momentum is high and strong, you don't need to go to that time frames. You can look at 30 seconds. You can use imbalances, alt black candles. Okay. So let's look at this on 30 minutes and 1 hour. If this was a live account, I would probably kill the trade. Not because I am afraid it will come back lower, or not because to protect the gains, but because to protect my mental capital. Because I have too many bad habits when it comes to trading. I may look like calm and grounded like right now, but I'm using my willpower, active effort to stay like that. I was really a degenerate trader. You should see the way I traded. Ooh. I was really a gambler. So sometimes I feel a urge for a relapse. Think of alcoholic people. One guy doesn't drink, he stays sober, and then something happens, and he all of a sudden he relapses and starts to drink like he never quit, right? So gamblers do have that kind of relapses too, and I experienced that kind of relapses. So if I stare at the chart too much, the devil inside of me starts to awaken, especially when I get bored in a pauses like this, right? Because as soon as I took the trade, it went to profits. It was a nice setup. I took profits. Then I left one runner, but right before the runner, it started to consolidate. Most of the times I get bored. I may start to add to position. After I add, price comes back. Then all of a sudden I find myself blowing an account when I was trading a really proper setup. Okay, now I don't want to see a closure below this. So I will move my stop loss even further. And price looks like it will take this stop loss. I mean, if it doesn't bounce from here, it might very well make a big retracement or even a complete reversal, because as we discussed, I accidentally closed position. Well, that's okay. it was gonna come back and take our stop loss anyway. When we look at the daily chart, what does price has tendency to do? I mean, we don't overthink, okay? We don't try to overcomplicate things. Just look at the chart. What does it do? For example, it dropped pretty nicely on Thursday, right? But did it keep dropping? No. It came back more than half, yes. Sorry for my English. I'm not a native speaker. I learned how to speak English from the internet and from the books just by myself. I almost never talked in English, so I'm just practicing my English too with these videos. So sorry about that if you get bored by my voice, but there's nothing to do. You will just have to keep patient until I improve my speaking skills, okay? Now I see it price already made 700 points movement. If the daily chart was expanding higher, if we were taking all-time highs and whatnot, I might expected price to keep going higher and close near the daily high. I mean, I might carry this position without trailing my stop loss until before the market close, okay? If it is a bullish expansion, we can carry the position all day long, but I don't trust this expansion because, well, I don't trust any kind of expansion in these days. Why? Because price does shit like this. It drops like there is no tomorrow, and then, well, I wanna make a reversal, and none of the short setups works after that reversal, okay? So let's say you took a short setup over here. Let's say you took something like that, and price came to these levels. Would you prefer to trail your stop over here, or would you prefer to keep carrying this position? I would prefer to just take my profit and get out. I mean, I don't like to stay in drawdown because I believe there is a certain risk for carrying a position too. What I'm trying to say is, let's say we took this long position, right? Let's say price is gonna do that, and then it will go higher. I wouldn't want to get this position, okay? I wouldn't want to get this 8R or even 10R. If I have the chance to get this 4R and be done, because this is still a risk, okay? Okay, it didn't take the stop loss, okay, it went back higher and it gave even more profits, but during this drawdown, what will I lose? I will lose my mental energy. My brain is going to get anxious. It is going to start suspecting. It will be exhausted. And this is a price I don't want to pay, okay? Because in the past, I paid this price. I made money by losing my mental capital, and I eventually ended up with a burnout, and I eventually lost all of my funded accounts. I had many funded accounts, and not just funded accounts, I also lost my edge. You know, I started to trade poorly. I was taking short setups in places like that, or I was taking long setups in places like that. I was taking longs over here, getting stopped out over here. Then I was saying, "Oh, it is going lower," and taking a short over here, and I was ending up with losing money or blowing my accounts when I exactly knew what price was gonna do. Okay. So the most important thing for me right now is my mental capital. I don't want to waste it. I worked for an hour, less than an hour. I took a decent setup, and risk to reward ratio was higher than that, higher than 2 in total. I believe we risked, I guess total profit is 2R right now. I don't remember how much I risked, but let me check. It was about $100. Let me calculate it real fast. Oh, I can't calculate it. Something wrong with my computer. Just a second. 18. $140 was the risk, and we made the risk 0 immediately by scaling out. And then we took some more and closed the day in profits. I will trade just like this for a while with paper trades, and after I get convinced that I started to create the habits I want to create, I will start trading with evaluations. I will pass accounts. Passing accounts is really easy. And then hopefully I will continue with live trading. Okay. If you have any questions about today's session, you may ask those questions on Twitter. Okay, my DMs are open. You can reach me out. And I will be more than happy to support you with your questions and your struggles. So I am going to be ending the session in here. I thank you for joining me today. It was really fun, and I believe it was really productive. I believe I learned something new and improved myself, gained more experiences. And if you found value in this, let your fellow traders know, let your trader friends know about this, because I will keep doing this, and I will hopefully see you guys tomorrow. Take good care of yourselves. Goodbye.